What up? What up? How you guys doing today? And before we even get started, let me light the wood now. This is such a good day today. There was a couple moves in the marketplace that were really, really easy to catch. Um, as you can tell by the title of this video, we're talking about not just the market review for NQ, but we're also talking about the market environment. Meaning, if you've noticed or have been watching the price action, and since the last time we spoke, right, um, every single day actually offers you a few different moves, both directions. You can literally catch this thing one, literally two, both sides at least twice on the same day, almost every day. Okay. And what I mean by market environment is, do you see what I'm pointing out now with like the price action and it's like kind of it's up and it's down, right? It seems like really, really annoying because we're in like the same like kind of range here. Okay. Like obviously like within this area here, it takes 3 days to even like leave this range, obviously, and to expand. All right. All right. The wood is on fire. Dope. Now, first thing, which is clear as day. Okay. You can't ignore it. Number one, and we talked about this before. Okay. And no, it's not AMD yet. It's not expected price action, but another thing to talk about. Basic fucking liquidity. All right. Outside of this, again, how we talked about it, we're going to get back to all the individual price swings here. But the biggest thing is how we're looking at price. Okay. Time plays the biggest role. Now, here, notice how this is the, let's annotate the first week of September. I do that all the time, don't I? I'll always forget to stick our text. But we got the second week. Okay. Now, this is what you need to understand. All right. Every month has 4 weeks, doesn't it? Obviously. Now, in those 4 weeks, now I can annoy you about AMD. All right. But when we talk about these 4 weeks, there's always going to be that similar pattern, whether it's a X or an A being our first week, right? And this is clearly an X. If you can't see it, you're blind. What I mean here, and again, make it easy for yourself. How do you determine an X? Too fucking trendy. All week. Way too trendy. And again, this is way simpler, right? And again, it's very clear here how we start trending. We go one way. Yes, we get stuck in the range for about 2 days and then we go down. But when we're talking about like X to the A, right? Now, we talked about this before about, high time frame or what the chart's doing at certain times of the year, right? This is not fun. Oh my lord, is this not fun? Damn, this blunt is crazy. But the problem is, accumulation week is the reason why it's going to look all funky like this a couple days in a row. But at the same time, right, it's still following like a smaller version of AMDX or XAMD. And my bad, I'm like looking at the iPad. I'm like watching skate videos and talking to you guys at the same time. So I love skateboarding, by the way. If you guys don't know, it's like my passion outside of trading. It's my first passion. And being a skateboarder, like I said, for over, 20 years or whatever, um, that's why I feel so good about trading. Nobody can do it for you. You have to get into the chart and do it yourself. You can't get tricks on a skateboard without going outside and doing it your fucking self. It's the same thing to me. And so the reason why I bring this up is because the reason why I'm so comfortable with some of these shifts or when the market gives me something different and I can notice it. Like, for example, not just XAMD or how simple of a concept that can be. But again, the first thing I said, even before that, basic fucking liquidity. All right. The question I get a lot is, how do I know? And again, when liquidity gets set up pretty much above and below you at all times. And we talk briefly a lot about the organization of liquidity in the marketplace. So when we see how we have a low resistance liquidity run to the upside because all of these imbalances here, wide open, Thursday's high, wide open, Friday's high was wide open, obviously got taken yesterday. But the biggest thing in the marketplace, do you see how, and again, this is so important and easy. Before we make this insane uprun, clearly price takes these lows here. And what people have to understand, I mean, really on a basic level, and we're going to talk about the levels in a second. But the most basic thing when you're looking at price action here, right? The X is going to give you that anticipated or expected price action, how I'm talking about. This is going to be, once you notice it's an X, it's going to fucking move and damn near not stop, you know? Not saying we don't have a similar move here. That's what makes it difficult. But all of the in between price action here, when we come down to like the 15, notice how many moves that we are offered per day. This is why the accumulation profile is stupid hard for a lot of people to accept. And when we talk about the organization of liquidity from week to week, day to day, and you're bringing it down here, right? Let's say you're scalping, day trading. This is entirely difficult. London was, and get used to this too if you are a intraday trader. When London's consolidated like this, you really don't like want to be a part of that. You really want to pay attention to see if Asia was trendy or not. And I guarantee you that first week of the month is, well, clearly, first week of the month, second week of the month has like some of the most news, right? So like CPI, PPI, you have a bunch of other red folders that cause New York to have all this volatility, right? Which is all well and great. And when we talk about news trading, by the end of the week, that'll be a fun video. But the biggest thing is when we come into the news here on a New York session, it's going to make London more of a consolidated run. Asia's probably going to give you a nice Judas swing. You can go to sleep that night and just wait till after news to trade. No problem. You don't have to be waking up in London, wasting fucking time here trying to figure out why this thing's not moving, trying to poke it with a stick, because it's not going to go. It's going to wait for New York to make that 8:30 news and run, right? And especially when you have days like this. So obviously, right, CPI, right, PPI, all these little super runs, right, go down before we come up. But all the moves that are offered per day, look, you have up run here in the morning, and it smacks here until about 10 o'clock. The reason why this is hard for people to accept because they don't understand how to verify things by time. When you get a certain retracement or reversal at that 8 to 11, again, not just because it's a kill zone. But when you get some of these time-based retracements, you need to understand what price is doing here. In an accumulation, I mean seriously, none of these things survive. Nothing survives in terms of liquidity. And what do I mean by that? Really look at the Monday. These are all the highs here, broken. That gets taken. You have these lows here. These get mostly protected, okay? Now, when we get to the top of the Monday, notice how it starts taking out everything left and right. I mean, like all these points here get taken here. All these points in here get taken here. Obviously, Asia never survives. So, right, obviously London takes out Asia low, right? Then you have New York taking out Asia low here, right? And then you got the same price swing taking out this New York low. But nothing basically outside of that New York low on Monday survived. Everything else got wiped. That Monday and that Wednesday low is the only thing stayed intact in terms of liquidity. The buy side was the target. Now, again, you know what's funny? Let's talk about high time frame PD arrays. Now, we talked on this really quick. Oof, that's annoying, isn't it? Yikes. Why did price go up here the way it did? Now, number one, me and my Discord discussed this yesterday. About 5 hours before we got here, I talked on this imbalance here and how we were supposed to get to this imbalance, and we obviously crushed it. I asked my students if this was going to be an imbalance that we were going to break, or should we react downward towards? Why or why not? And asking you guys the same thing. Why did we not just react from this imbalance? Now that's interesting, isn't it? This goes back to one of the original things we talked about on this mentorship. When fair value gaps work, again, even on like that daily chart, right? And again, we can go and check this, right? And again, how small this is compared to the daily. But I'm gonna be honest. Let's kind of check out where this fair value gap is, right? Again, finally put the levels on. So we're gonna go current. So this is the funny part, okay? This is what I want you to understand. And again, I can even go up another one and give it another shot because I want to really see where this fair value gap is. All right. Now, do you see how the fair value gap is? Again, it's completely drawn perfectly. It's a 1 day fair value gap, so it's time frame specific. All right. I do that all the time. Do you always hear me when I like talk too much and then like forget to hit the blunt? So I'll just be like holding this shit and I'm like forgetting about it. I go to like type something and I'm like, bro, okay. Well, my point is, right? Watch this. Now we're in the 2187. All right. Now we're also in a premium of the 2187. All right. That is really, really good to know. That is really good to know. And look, the last time we went through this dealing range, right? We talked about this low here. We talked about all this being a stop run. You remember that? Okay. Now again, all these highs here. Look at where price perfectly came from. Oh man, beautiful, right? And we also talked about why the high time frame is key. The daily chart is king, right? So the same way that I'm looking at this imbalance, I was looking for it like this. Well, this imbalance here is also in the same spot. We do have a little like open space here, and we get like a nice gap, right? But when we rebalance this thing, it's not outside of the realm of just hitting the high and coming down, which is completely fine. However you would like to view the logic here, that's fine. If you want to just, the high is comfortable for you, if you need the gap to feel more comfortable, that's fine. But what I'm saying is when you're looking at time and price correctly, right? And watch, we talked about that Monday low, Tuesday, and obviously Thursday, right? 4 days in a row. Price left this imbalance open. You know what's funny about this? Notice where price stopped at today. And the question, right? Is this a real algorithmic fair value gap or not? That's the question. And the reason why I knew price was going to get up here is because it was. That's a real algorithmic fair value gap. Was it balanced all the way to the EQ and slightly lower? No. So when price starts to give all these rejections in here, and the funny part is we've been literally in my group trading both directions in this bitch because of the accumulation week. Look how disruptive this was. Again, would you be actually confused on where price is going if you actually came and started to break down price by the levels? Now, 2187 is, again, it's a bigger dealing range. It's not going to get ran through like water on NASDAQ, like a 27, an 81, or even a 243, right? Because the 729 is normally really good to keep track of price throughout the week, month, daily chart, whatever. And again, the more that you're interacting with this thing, what do you notice? I'm gonna give you about 10 seconds before I say it. Pause video. And I know you're not gonna do it, but just please, just pause video. Like, I'll give you a little. Just here, look. Just look in that area. You probably already see it, but just take a second. Take a 1 second while I hit the button. Yeah. Don't tell me you didn't find it yet. Well, since you didn't pause video anyway, this looks like a bearish order block to me. Yeah. Why do I say that? Up close candle, at a resistance, gets shut down by this candle here. We also create a lot of power 3 liquidity underneath this level here. Now, the only thing that I'm thinking of, right, is that, again, we have our macro liquidity is engineered technically on the bottom of us, and the high here can be protected if it chooses to. We don't know yet. But what we do know is that this high here, 19,683, is a shared high. There's a bunch of liquidity above here, I'll be honest. Like right in this area here. All right. So this is, again, comes down to why I talk on these things the way I do. Organizing of liquidity, finding the PD array, seeing where price is respectful. So if we've already completed this to the downside, we've seen that. Completed this to the upside too, though. That's a problem. Now, this is, by default, it's making a high, lower highs, lower highs. Now, I do want to see this order block get played. That would be great to see price reject that and then head down towards this liquidity again. That would be clean. But we do have to understand, price is already telling us where it wants to go, so we have to find what it's telling us. Now, I'm going to do us a favor really quick. Let's just shift perspectives only for a second, okay? I want you to get used to doing this, by the way. Now, really think, all right? We did not actually complete this dealing range at all, but like, just really quick, is this like NASDAQ's literal high? And yes, it is. It's NASDAQ's literal high. That's what makes this narrative so tough. A lot of people, clearly, even including me, we're not used to trading near all-time highs or, whatever. And we see exactly like why that was possible. This is pretty up there, you know? Now, the funny part is, like, what I'm thinking about, like, if we do step into this dealing range, right? Because we're not there yet. Okay. I only shifted it up based on the numbers, and you can see where price is giving you a breaker level, LV, order block, rejection block, whatever. You can see the new high where it is exactly, which I actually kind of want to mark this a little bit, actually a lot. And the reason why I think like let's keep these points open, okay? Now, the thing is, I want to point out that we have stepped into this dealing range at least twice, okay, a few times. So it's not a stranger to that dealing range. It's not that it can't range expand and, start to complete this dealing range based on algo 1 or 2. And we are going to talk about algos on this channel. Give me a little bit. The funny part is when you're looking at like liquidity this way, there's power through liquidity above this, so the high is possible, and I like that. But like I said, we're looking for both areas of liquidity. Okay. Now, the funny part is like this does seem kind of low down here. I mean, although we have these equal lows that I pointed out. But does the stop run kind of feel as though it's on the downside towards this dealing range so that we can just trade upwards here, which is also again PO3 and PO3. Even if we get from here to this EX or EQ level, that would be very dope. That'd be so dope. At that point, we would know that price is going to fill in this dealing range for sure. And so when we come up here, the shared low would be 19,683. That being said, the reason why I like that a lot and why I'm paying attention to this particular price is because it's a Goldbach number directly. Now listen, the reason why I bring this up is, hold on, let's go down to a 4-hour and I want to show you something. Now, 19,683 had an interesting set of events, all right? Now, outside of all this, okay, let's go to, let's just type it in. Too lazy, right? $19,683, all right? Now, notice this, all right? I want to show you some stuff. This is what I'm talking about. This is what I'm talking about. This is why I feel like price needs to get back above this shit, man. It's too smooth. It's entirely too smooth. Look at it. However you want to look at this price action, right? So like, listen, dealing range, all right? Now, if I go to any other dealing range, right? I mean, I could, shift it down, whatever. But like, look. You're right on the high, but look how perfect the liquidity is. 4 times though. And this is really where it gets funky with the algo, right? It leaves this liquidity for sure. Does this massive move downward how we've seen it. But it's not a stranger. And again, we still have imbalances above here and everything. Crazy. Now, not 1, not 2, fucking 3. Come on now. 4 fucking times, bro. Now that if that's not abundant as shit buy side liquidity pool, you're tripping. You're tripping. You don't think price will get back up here? Oh my god! Obviously, obviously. Come on now. What do you think? You think price is going to come up and support and resist this thing? It doesn't work that way. They're going to run these motherfuckers upward, and everyone here who thought they were safe, no. Fuck you and fuck that. They're taking that out and they're taking you out. So if you're watching this video and you have sells from above here, maybe you are in, obviously we're not going to swing futures, but like if you were in this area, I guarantee you that you're going to get taken out. And so all these people here obviously are in profit, right? Now, the only thing is look at the levels. And again, we're still viewing this on a 2187, so let's bring it down. But the high is the same. So we can come down to a 729 and dominate. And again, being on a high shit PO3, this is way different than being on gold, which takes advantage of the 9 or the 27 to do really well. Or QQQ and SPY, which takes the 3 and the 9, it does really well. So when you're looking at price like this, boom, now this does in fact look like a stop run, right? It's right outside of this PO3, even though we've already jumped in on it. We jumped into this imbalance here. Okay. We talked about the high time frame, one daily one that I pointed out, and we broke it completely. And when you're looking at price like this, I mean, really coming back to the idea, right? Was price looking to react off that bearish imbalance? Fuck no. He didn't give a fuck about that thing at all. And the reason why is algorithmically, it can't ignore this number. And this is one of the most major Goldbach numbers. Do you think it's going to ignore 19,683, leaving all this liquidity above this? And we're pulling towards this thing like it's reaching for something. Do you see what I mean by that? Via the what? Liquidity void. Starts an insane run. And it's not going to stop. It's going to do this here, right? It's going to run up to your order block level. It's going to slightly stop. It's going to act as though it doesn't want 683. It's going to act like all lethargic in this area and shit. Then it's going to pop down. I guarantee it's going to re-enable back off this liquidity void and then run the high. Even if it does it quickly towards this area, it's going to stop right below it. Then it's going to create some short-term buy-side liquidity, and it's just going to run it. And the funny part is, you really look at like, anytime you study a real attack on liquidity, go study it. And I'll show you what I mean here. Ready? I can show you anywhere. Watch this. So if we come down to like a hour chart, I'll show you what I mean. All right. Now I can get rid of all this. I can just show you literally based on session. All right. Now this is my point. All right. Now watch. In this area here, okay, have us both sides here, but I'll show you just one random one. All right. Now you see this here? How obviously price at first gives you an optimal trade entry. And this is another thing about market environment right now. If you're not used to how much you need to scalp this thing in order to be successful, these are very quick moves. They are far and they are fast, but they do not allow you to go very long. So if you're not taking profit at the first logical level of liquidity, yeah, you're losing that. And again, even if you knew you were bullish, you need to understand the objective, right? So even if you were bullish and you tried to buy too early, yeah, you're fucked. It's going too fucking far. You cannot sit there and not nail the fucking entry. You have to be understanding of the objective here. So before I even get down here and show you like what I mean about the attacking of liquidity in order, the main idea is, again, look in order. This is midnight, right? And I've talked on this channel about New York midnight opening price and what you can do with it. So we understand that the algo is going to reset every day at 12. All this here is easily explained. Ooh, but Jay, problem is, how do I know what's important here? And this is a lot of shit going on. I want you guys to get comfortable with this. We talk about a lot on this channel. Just rewind it if you need to, okay? Now, when we get to 12 o'clock, do you see the first thing we do is spool downward? Right? Got it. Now, when we spool downward like that, you have to be looking for this live. You have to be understanding of this. Let's say you did take early buys here, whatever, you're in profit. Okay, cool. It works out for you. It works. This time. But you want to be careful of that. You want to really look at this and say, you know what? Why is the low at this time? Why the fuck does Asia give me a perfect low and previous day's low is super intact? Going on 3 o'clock, 6 o'clock, 8 o'clock, and you're like, bro, it still has not, interacted with this level at all. This was highly protected for a couple hours. and so was that low. But the reason why I'm talking on it like this, you have to be more like, again, I know you understand basic liquidity, but you need to understand time. When this gives you a perfect low at 1:30 in the fucking morning and London wasn't able to take it, you guarantee you might want to be looking for, again, both sides of liquidity, because we talk about Monday, Asia, first week of month. The high and the low is liable to get fucked over in here. It's liable. It's purely accumulation. And if not, it's going to be XAMD, which is going to make it even worse. And it could still get hit like this. And so look, X, A, M, and then your D. Obviously. The manipulation down so they could distribute up and make a massive move. But this is the point, right? Before you even get here, this is what you have to understand about liquidity, not just where it's found, but what time was this? And so when London couldn't get down here, you need to keep this open. And also, you have this short-term one here too. So when price at 8 o'clock in the morning, right here, boom, blast up and takes this high, all right? This is what you need to be looking for, all right, in order to not confuse you. How you're looking to actually participate here. Again, this is giving you multiple moves depending on when you're looking to trade. The first move of the day is always going to be offered to you technically with your London session. So London 3 to 4, you want to look for this. So right in this little pocket, you could have been a buyer. Okay, a lot of imbalances in here, so you could have came down. Boom, we're going to keep this for later, obviously. So if we saw this pop in, this is why you participate at the kill zone. You don't need to be down here to make money. You can participate a lot safer from a kill zone inside of an imbalance. No problem. Do your thing, right? And so all this here, you already see that these need to be filled in. So this already feels like this needs to work on this session and does not have to be forever. Understand when you take liquidity. If I told you this before, if you're in at 3 or 4, 3 to 4:30, you're out at that 8 o'clock. You're done there. And especially if you have wide open liquidity at Asia or the previous day, you need to keep watch for that. And so look, when you get out here, it stabs down. So you could have been, let's annotate it, right? If you were awake here and this is your session and this is your time to look for pressing of the button, right? That's going to be your London 3 to 4 or, you know, that 2 to 5 kill zone, right? However you want to put it. But the biggest thing is let price give you a discounted PD rate that you can buy from. All right, attack that liquidity that's price is going to reach for by 8 o'clock. Once you get there, you have to understand this is a whole separate situation now. This is a whole separate move. So for people who are just waking up, just getting on the chart, whatever, I have students who are just like, you know, they're from California or, you know, they're from Texas or other places that might not be right in, you know, EST. So it's not as comfortable to trade London, right? So some of them have to come on. I mean, it's like 6, 7 o'clock in the morning, bro. You know what I mean? Them trading a New York session. And so once they understand the assignment, New York, optimal trade entry, takes previous day's high. It's going to aim for liquidity damn near immediately. And on this manipulation part of your cycle, X, A, M. So you have to be worried that, okay, well, manipulation has a function, right? It can take liquidity. On either side of Q1, right? Or it can easily be a V or an M or a W or upside down version of all three of these, right? And the biggest thing is that, yes, manipulation can start the move. The same way I show you guys like on a 90-minute cycle, like Q2 can start the move, or it could do like a turtle over Q1 or either side and then start the move, or it could do like a Q3 over Q2 or whatever. and then simply start move. But my thing is, when you're looking at this regardless, right? Yes, look at these as singular objectives. So once this is taken out from the buy side, yes, you can sell this. And yes, you're going to target this low and this low. What else is down there? Fucking nothing. You do have this Monday low, and you could kind of leave a runner for it if you really think it's going to get down there, but we don't really touch that. And the reason why is, again, look at the time. All this actually happens pretty fast. This is like 10:30, 11 o'clock in the morning. So yeah, you can go into like a Q4 or, and watch. This is what I mean. You have to understand the objective and the assignment. Looking at the chart regardless, right? This is what I'm talking about. Q3 can turtle Q2 and run down so it can make that sell move. All right. Now, the 90-minute cycles themselves are playing a different version of the puzzle. So we talked about from Asia on, it was XAMD, but that's not the only thing you pay attention to. So 90-minute cycles, you have A, M, D, X. And X can be a complete reversal. So right here, right, you have 90-minute cycles, AMDX. All right. But again, if you're understanding of what we talked about, if you were in at this Q4 and you bought it up, cool. And you're taking profit here. That's one way to strategically use the algorithm. You're also gonna, I was about to say, if I lost the lighter, I'd have been mad. Oh my God. Hold on, let me drink some water. Yep, I drink a lot of water. I drink a lot of ginger ale and like a lot of Gatorade when I'm skating. And like the reason why I bring it up is like this is the thing. Yes, I can choose water every day. It's a easy A plus setup. It does me well. I don't mind it. I take Q3 over Q2. Comes down like water. It's perfect. Mhm. That goes to show like how much weed I smoke in reality. It's like, bro, what are you talking about? But no, in reality though, I'm serious. Like when you're looking at price action like this, you could find a banger or a gem every single day just by breaking it down. And so whether we talk about Goldbach levels or whether we talk about like confluences in general, you're seeing how when we break down price like this, you're not confused by the actual price action. And in this type of environment, what I'm talking about, second week of the month being like a XA, horrible. I mean, like being offered 2 to 3 moves per day, either side, that sounds cool, but it's really fucking not fun. It's really not fun. This is hard to deal with. And especially because maybe you did sell this down. You get out the marketplace. You come back to all this, you like, yo, it'll make you question like what you just did. You know, you did a banger job of taking the trade in a way that's logical. Yes, you could take Q3, sell it all the way down, understand that Q4's function, if it's not a continuation of Q3, Q4 will give you a full fucking reversal like this. Now, again, understanding what I just said, because that was a gem, yeah, you could buy Q4, target Q3's high, and beyond. Price is bullish. Cool. And again, we talk about dealing range, right? So, shout out to Mel, right? Mel went crazy. We talked on price action today, and I basically like literally like right when I woke up, right? Because we trade news. We trade news in the Discord, but I asked Mel, my student, right? She's been really good with this the last couple months. I can show you how to trade the news, and it's very, very easy. The news is completely predetermined and can be predicted within seconds. All you have to do is go and really look at price action and how it behaves every time CPI, PPI, FOMC, any of these events that are profile, red folder. Yes, you can come on and dominate. Am I promoting you to do that? No, not at all. But you will learn how and make your own decision on that. I'm not encouraging you to go and blow accounts up. Leave the news alone, is what I'll typically tell you regardless. But she did a banger job. I said, hey, yo, Mel, what's the plan for the news today? Are we up and down or down and up? And she was spot on. Nope. 8 o'clock, we're going to go down, touch the 243 low. That's exactly what we did. And we're going to springboard from there. And she was spot on. Spot on. And she knew the target a week ago. She knew the target a week ago. She understood that we're going to get back up to this high here. And especially because when you come into like the Discord, like we talk about all sorts of funny things. And like, you know, how the chart presents itself. We look at, yeah, like a bunch of, you know, how you're looking at the chart, you know, and you need to be aware. Like, you want to be so sound in your logic that there should not be a stone unturned to where any of the price action here, even by a particular candle, going up or down, being at a certain speed, being at a certain price at a certain time, these things make a difference in your trading, your accuracy, and having an understanding that, and you know, I'm so blessed to, you know, be able to see a good community of people just win constantly. Yeah, we take losses every now and then, but to see the whole chat just blow up, yo, bought this, bought this, sell that. I mean, they're the ones taking like literally both sides of the marketplace every day, killing it still. Incredible. Incredible work. And again, it's all laid out for you. I know this is annoying visually, so here, clean it up. There you go. This is my point, man. Look at this right here, right? See how choppy all this is? Normally, someone would stay out the marketplace here. But you know, between me and you, where's price going to go in reality, bro? You need to look for support there. If it breaks through, it breaks through. Then you deal with that. But ultimately, when you see that rejection, again, this is 9:50 in the morning. You guys who are into macros, right? How do macros play out with Goldbach? Ooh, that's a nice conversation. So before I say anything, and we'll talk on that on another video, you can see how perfectly some of these play out. And look at that, right off your fair value order block level. You guys want to really kill it trading macros? Come to the Discord. There's information on how to align yourself with the macros in a really special way. And again, accumulation macro, so you might not want that one. 1150 to 1210 is actually a really underrated macro. A lot of people like the 950 to 1010 or the 850 to 910 or the 403 to 430, obviously during London. 233 to 3 o'clock is a great one as well. And again, the reason why I know all these up top is because they are really, really special. I'm not gonna lie. ICT did a banger job of, you know, giving you just basically like secret ways to trade these algos. And it's really interesting to find that, like, you know, these times of the day are so special. and so easy once you learn how to trade them. And you could do some simple things here. Order block. And price is still bullish. So what did I say? When you're bullish, it's going to respect bullish PD rays. When price is bearish, it's going to take out lows, respect highs, and respect sell side PD rays. And the funny part is, right? Watch this. All right. Now, do you see how when we get into this area here, let's really zoom in. This is kind of funny. And this is what I'm talking about with like the attack on liquidity. So when you come down here, right, and I'll show you this again on the higher, and watch. Oh, I did it first try. I was like trying to think of the shortcut, and I got it first try. Now, remember what I said about this liquidity here? All right. You thought I forgot. No, the lecture is a lecture for a reason. All right. Now watch. When you take these highs here, that was the last point we talked on that before we went off on a tangent. But when you're looking at price action like this, and my whole point is right before it takes a major draw liquidity, it does this weird thing and acts like it doesn't want to take it at all. Like, it's funny as shit, actually. It does it here because it takes that one, and it does it again down here. I'll show you both. Okay. Now watch. The reason why this is so funny is because I'm trying to get you guys to learn not just through Goldbach levels, but through market organization, through logic, through experience, right, with me, that you're going to learn how to hold your trades longer and understand when you need to get in or out. And not just in a stupid way, but I mean really in a way that impacts your trading. You can come in and fucking nail this thing. It's weird to say it like that. You can nail it. I sound like a YouTuber, don't I? Like I said, I'm not really a YouTuber. I'm just a guy that makes YouTube videos. That makes no sense. But, you know. And the biggest thing, right? And we're talking about the liquidity here. All right? Watch it. Now, this level here. Watch this price action, all right? Watch how dumb this shit is. And it's funny as shit to me. It happens all the time. And people get so scared about this. And people who with experience, they get used to it. But what happens is, right? Like, let's say we're in this area, okay? And you're understanding that the 243 low is whatever, and you're coming down here. So you're marking things, and you're trying to figure out like where price is going. Let's say you understand the lows here, and liquidity is there. So you're in a trade, right? Now, a lot of people will be, let's say they're like in this area somewhere. Let's say you're understanding it's bearish, and you didn't get a chance to get a higher PD rate, but maybe you got it from, the EQ, right? Or the breaker level. And there's a breaker right here. Okay. So a lot of times if I feel like I missed like a discounted PD rate that I really wanted, I'll just come down and trade breakers all the way through because they're going to work. And again, you have another one here. Break. This comes up, up, there, for you drop again. It tags this little low with these highs. See that? So I'd be comfortable taking this breaker here. And again, a lot of people will mistake that for an actual gap. There's probably a 2-minute gap in here or another fair value gap looking structure, so they'll confuse that for that. Although I'm not looking for a fair value gap down here, I'm looking for a fair value in my fair value, right? So if I'm not there, I could just take the breaker, whatever. I'm cool with that. Every time it takes these, parallel lows or whatever, here, here, so you sell right in these, and I'll color them differently. You'll sell in these green boxes, right? We talked on breakers, okay? Oof. About to roll a blunt. And it's funny, people are like, aren't you already smoking a blunt? I'm like, I sure am. And we're going to smoke another one. It don't stop, my guy. All right. Now watch. We're talking about that low and draw liquidity. Watch when price plays out and right when it drops in, watch this right here. Now, you see the fair value level, and it makes sense. But watch before it gets to the DOL. Well, it always does this stupid shit. Now I'll explain it. Ready? Now, here we go. Ready? Watch. Right there. See how it stops? All right. Now, notice how when price came down into this dealing range, all right? A lot of people don't realize that some of the best targets are not just the high low of your dealing range, but when we talk about previous days low, previous highs low, all the ones where I tell you how to pair liquidity to a time, right? To a session or a day or whatever. You need these. These are the ones that are the most abundant in liquidity. They're easy to spot and they're easy to time. You can come in and see it in 5 seconds. A Tuesday low and a Tuesday high are definitive. You can't really change it. So, that being said, you notice how we're in the middle of this 243 and the actual like target is right on EQ. It's technically like 9 times out of 10, it's a major Goldbach level that a nice DOL is aligned with. And I love seeing that. And I'm not talking about like just PO3 liquidity, but I mean like real liquidity, like whether it's, and we're looking at previous days low or whatever, right? So, and look, you see how price does this weird thing where again I can draw the path. It'll be storming towards it and you can see it. But the problem is when you make it to that breaker level, this becomes the actual issue. That's why when you're seeing like the breaker and mitigation do its thing like this, now it's time based. So by a certain time, it needs to make algorithmically this structure. It's going to stop for a second only to like mitigate and help people who are on the wrong side of the marketplace to take some loss back before um, it literally dumps lower, or this will help you actually get on the right side of the marketplace if you are on the wrong side and you can see it. And the thing is, people won't notice this right away, but it's setting up new liquidity. Like I said, you have to get used to seeing this. I like how you guys like DM me and message me and say like, "Yo, I'm so hyped on the videos and glad you guys are learning." And you guys already know what the deal is. Every time I get quiet, you guys just know I'm smoking. That's the funny part. So like when you're looking at these here, it's just creating new liquidity for you. And what did I talk about? You're in the breaker and the mitigation block is right next to you. So when you drop down into this level, it's going to start reacting. Liquidity void does its thing, right? Algorithmically, it's going to come from the right level. Fair value is in fair value, right? Isn't it? Coming right through the level. If you want a more perfect version of it, you can go to another dealing range, but we can see this on the 1 minute. This is a clear imbalance. The consolidation itself is inside of the fair value gap level. You can see where it tagged it, okay? And then we drop, take liquidity again. Now, once we drop though, what does it do when it gets back to that breaker level? What do we talk about? If you miss the most premium fair value gap here, excuse my language. When I meant discount earlier and I meant selling it, I meant discount as in like taking a PD array or taking a PD array in general, regardless of if it's a premium or a discount one. Taking a premium array is helping you get on the side of the marketplace that is um not just the right bias, obviously, but it's helping you participate in the next low resistance liquidity run. It's not going to give you all of these insane drawdown ass moves just trying to jam the button in this area. You know what I mean? without understanding the objective. Obviously, the fair value gap is easy. Now you get here. Yes, like I said before, you're going to sell from here. It's easy. People think that's just the fair value gap. That's fine. But when you get the breaker mitigation block, you're going to watch for that. It's going to be right above your target. It's going to annoy you like that. So don't just get out of the trade thinking it's going to fully fucking reverse, because it's not. And then watch. Look at this again. Ready? It's going to stop for a second and then dart. See that? And then look, mitigation block. It's not over yet, but it will be. Watch. Do you see how it starts to give you the breaker mitigation, and then once it starts to jam back through the EQ? Yeah, you don't want that. You don't want that. And bullish. Right back. See what I mean? And the reason why we can look at price like that is because we have a lot of things in place that keeps you on track. So when price gives you something like this, and you're, again, 243, 81, however you want to view it. All right? Now watch. Lo and behold, what do we do? Now, this is nothing. For those who are familiar, it's algo 1. There is not one algo in the marketplace. There is 2. First algo, and again, we're only going into the basics. Looks like this. It's a super, super huge curve like this, right through your dealing range. And how we talk about algos is just a pathway that price is going to use to get from A to B or A to B in your singular dealing range. So if you're paying attention, you can find which algo is running, and you can play exactly how it's going to work. So there's plenty of things that you can look for that price is going to reference some of these algos. And it goes in such a complete order to where you have to be understanding that, like I said, not only does the chart give you predetermined areas to focus on, but it gives you um like what's the way to put it? It's so perfectly organized that, like, again, I can do this the way I want to make it easier on your eyes rather. But it's so easily organized in the marketplace with how they do these things. The way they want to move price from A to B, after you watch it for so long through a dealing range and understand like why price is so perfect, the algos explain so much. And it's so clean that when you can notice it, that's when you start to have less anxiety in the marketplace about draws of liquidity, or if price is really going a certain direction. Um, and you're like having a moment where it really is like a damn, I don't feel confused moment anymore. And so I remember when I got like that in my trading where like, and bro, the ICT is right. Like, you should really not trip about like missing a trade, losing a trade. There's so much that you can do in terms of like price action. It's really every 5, 10 minutes that you could find a profitable situation, I'll be honest. It depends on how you view the chart. And the way that we're viewing the chart right now is perfect. It's perfect. And this is, again, ALGO 1. And I'm just giving you like the pathway that it takes so you understand like why this is so easy to spot once you're used to it. ALGO 1 goes a specific pathway. Okay. And I'm sure you're familiar with another way to view ALGO 1 is nothing but what? Market maker model. So this is a what? Market maker model. Is it not? You tell me. Is ICT using Goldbach levels? Well, you'll have to ask yourself that question. Till next video.